Trading on shares and derivatives is very normal nowadays because people want to have an additional source of income. Further, we cannot deny the role of internet and digital platforms available with information to invest in the market. In this information age, a 20-year-old with a mobile phone has more financial information than a partner at Goldman Sachs 20 years ago. However, despite all these advantages, most people step into trading without having in-depth technical knowledge and also about its taxability. Now, if you are new to investing, my suggestion would be first to learn the tricks of the game. Till then, it's best to focus on buying high-quality stocks of companies with sound financial fundamentals and easy to understand business models. This gives you a strong chance that your investments generate profits for years to come. And my friends, please understand that taking trading strategies in financial markets without having knowledge is basically gambling, and we all know the outcome of gambling in the long term. Hello friends, I am Debajyoti Bhattacharya, Chartered Accountant, and today we will discuss number 1, how to show derivative transactions in the income tax return, and number 2, if we are required to maintain and audit books of accounts when we enter into derivative transactions. In this video, we will not get into definition part but only the taxation part. And if you are not aware how future and options trading actually work, we are going to cover it in a separate video. Now, trading in futures and options is a business transaction. Yes, you have heard it correctly. As per Income Tax Act, it is non-speculative business income. By non-speculative, we mean it is a normal business income. Therefore, salaried and retired people who are trading in future and options are actually doing business transactions. Coming back, future and options income or loss is a normal business income as per the Income Tax Act, and the due date for filing the income tax return is 31st July for traders for whom tax audit is not applicable, 31st October for traders to whom tax audit is applicable. To determine whether the tax audit is applicable or not, we must calculate trading turnover. It is important to note that tax liability, however, does not depend on turnover. So turnover calculation will only help us to determine if tax audit is needed in our case. So turnover for futures and options trading equals to absolute profit. Absolute turnover means the sum of positive and negative differences. Now let's see how to calculate the turnover of future and options by taking an example. Suppose a trader has entered into the following future transactions. Transactions A, B, C, D, E, F and G. The positive sign shows that he has made profits. The negative sign shows that he had made losses. In step number 1, we would calculate sum of favorable turnover, which is in his case a total of rupees 48,841. In step number 2, we would calculate sum of unfavorable turnover, which is in his case rupees 15,430. In final step, we would calculate the absolute turnover, that is the total of favorable and unfavorable transactions. Therefore, turnover for future transaction is rupees 64,271 rupees. Now you would calculate turnover for options trading for income tax purpose with examples. We should note that there is a significant change in calculation of options turnover. Previously, premium on sale of options was included in turnover. But now, as per guidance note on tax audit issued by Institute of Chartered Accountants of India, since premium is always included in determining the net profit from transactions, the same should not be separately included. If a trader traded in options and entered into the following transactions, his calculation of turnover will be as follows. In this example, he has entered into 7 options turnover. In some cases, he has made profits. In some, he has made losses. So in step number 1, we would calculate the turnover of profitable options transactions, which in this case is 5994. In step number 2, you would calculate the turnover of loss-making options transactions. In this case, it is 49,267. In step number 3, we would finally calculate the total turnover, which is the sum total of profitable options turnover and loss-making options transactions, and the total is rupees 55,261. Therefore, in both future and options trading, the turnover does not exceed rupees 10 crores. Hence, tax audit is not required in both the cases. We will show our business profits or losses from future and option trading in both the cases as normal business income or loss in the income tax return. Now you would understand the advanced tax provisions applicable for future and option traders. A taxpayer whose tax liability on the total taxable income from all sources during the financial year exceeds rupees 10,000 is liable to pay advance tax. Income from future and options trading is a non-speculative business income and is taxable at slab rates. Therefore, provisions for advance tax is very much applicable over here. Now you would understand the provision for carry forward of loss for future and options trading. Under future and options trading, the trader can claim set off and carry forward of losses if tax audit has been conducted by a professional chartered accountant in practice. This loss can be carried forward to future years and set off against future profits to reduce income tax liability. Loss from future and options trading is a non-speculative business loss. In the current year, meaning the year in which the loss is incurred, it can be set off against any income except salary income. In future years, it can be set off only against business income. The trader can carry forward the loss for 8 years. If you are thus trading in future and options, the most important point which you should keep in mind is the trading turnover. And if the trading turnover is less than rupees 10 crores, then the provisions of tax audit will not be applicable, as more than 95% of the transactions are executed digitally. However, if the trading turnover is more than rupees 10 crores, tax audit is applicable irrespective of the profit or loss. My friends, hope you have now basic understanding of the taxability of future and options trading. Do your research and may God always bless you with profits in your trading journey. Thank you very much for watching. Take good care of yourself and your family. God bless you all.